Alrighty. Now, before we dive into the wonderful and juicy topic of liquidity, I was thinking about, what's going to be the best way to teach this. And I quickly realized that, especially if you're going through the course for the first time, before we kind of get lost in the source and we get quite technical with things and we start to dive into even more concepts and more variables to be thinking about with your trading, I think it's first good to take a step back and think about what is the overall philosophy here behind what we're trying to do? What's the overall strategy? Like what is our framework for how we're looking to enter trade? So what we're going to do now is kind of go through a very, very high level, it's not super high level, but reasonably high level trade plan. Just thinking about the major concepts you've learned so far, which is market structure and supply and demand, right? They're the two main modules that we've looked at for technical analysis. Let's think about how we could just trade those together into a trade plan. And then obviously we're going to spend this module you're now dipping a toe into to overlay and bake in the liquidity concepts within that. Okay, so kind of if you think about it, three main concepts that you use within your trading: market structure, supply and demand, liquidity. Before we add in liquidity, let's just think about how we can trade supply and demand and market structure together. And I think that will really help you to not get too lost as we go through things, and it will hopefully make a lot more sense. Now, with that said, there will be an entire trade plan module shortly after the technical analysis module where we'll go into this in a lot more depth again. But again, let's just go through it now with supply and demand and market structure. So as you can probably see with this diagram here, this is probably, as kind of as simple as I can make it. If you think about, let's say, trading with just two time frames, right? And you've got your higher time frame, whatever one that is that you pick, and your lower time frame. And the general idea is, if you're just thinking about one time frame, right, and we see that price is bearish, we know that supply is in control, the lows are weak, the highs are strong, right, because they're breaking structure, so we expect that to be respected. We can look for shorts in supply, and we can target these weak lows, right? We expect demand to fail, so on and so forth, until eventually what happens, structure shifts, where we get that bullish shift in structure. What do we also know then? When you get a bullish shift in structure, when we look at supply and demand, we know that that means supply has failed and it's likely demand is starting to take control if we then see demand be respected and demand hold. Okay, so again, thinking about one time frame, we can look for shorts from supply, targeting those weak lows, and then eventually supply will fail to do its job, demand will step in, structure will shift, order flow will shift. We then look for demand to take control. We need to see it be respected. Okay, so at that point, previous unmitigated supply zones, what do they become? They just become reaction points for pullbacks. We then expect demand to hold, and that's where we can then look for longs to target the weak highs, right? The highs now become weak because they failed to break structure. And again, rinse and repeat. We look for price to come into demand. This is now a strong low, and we can look for longs from demand, right? That's just one time frame. So basically what we want to be doing is following whatever higher time frame it is that we individually choose, but we want to use a lower time frame to help with confirmation of these zones holding, but also to give us increased refinement as well, right? To increase our risk to reward, because rather than, let's say, entering on this POI directly, which of course we could do, and imagine this was a real trade example and you've got 138 pip stop. Instead, when price comes into this area, as soon as we hit our high time frame POI, we drop down to our lower time frame and we just look for the same thing, right? We look for that lower time frame order flow to shift, lower time frame shifts bullish, lower time frame demand takes control, right? And then you can get in with, let's say a 65 pip stop, which would be, more than half, less than half, I should say, of what the risk to reward would be here. So that means, your stop loss size, that means you essentially double your risk to reward, right? So you get extra confirmation that this POI is holding by waiting for the lower time frames to shift in your favor. It's basically just a timing mechanism to show you that, price isn't just going to blast straight through, that potentially this is holding. And then we also get the increased risk to reward. Okay. That is the bare bones philosophy of what we're doing. Following everything on the higher time frames, waiting for price to enter our higher time frame POI. We understand what the higher time frame narrative is, the higher time frame story, because we've seen that it shifted bullish, and the expectation for the next higher time frame move is that. But once price gets here, rather than just entering long directly, we just wait for the exact same thing to happen on the lower time frames, right? Remember, markets are fractal, so price comes in the lower time frames, and this pattern is the exact same as this pattern, right? It's just price being bearish, then it's just bullish, and we get entering on the demand. Same thing here, right? But this lower time frame execution is what we're going to be using in every one of these higher time frame POIs, right? Not every single one, but whenever you want to trade a higher time frame POI, if you deem it to be high probability, you've built the higher time frame story, i.e. if we've been heavily bearish, we pull back up to this extreme supply at the strong high. When price gets here, what do? You drop down and you look for your lower time frame execution model, okay? But obviously it would be a bearish one, not a bullish one. Okay, so that's the general idea. There are various entry models, and that's what you're going to learn towards the end of the liquidity module. But first, I kind of just wanted to give you the guys the general overarching philosophy of it, and it's basically higher time frame ideas, higher time frame POIs, lower time frame execution. We're not sitting on the lower time frames just trading lower time frame order flow, right? This is what comes first, right? This is how you will get consistent, how you will make good money. This is just what you do once price gets to those areas. So that was when we're just looking sort of at, two basic time frames and just thinking about it in sort of its most simplistic form. Again, higher time frame ideas, lower time frame execution. Now we've got a bit more of a complicated diagram, okay? And again, when you first look at this, it can just be like, oh, what is all this? Loads of words, boxes, lines, circles everywhere. But hopefully you should be a little bit more familiar with the kind of general idea of this as we've gone through the course. Hopefully you've watched it in chronological order. So this gives a bit more of a realistic idea of kind of how the market moves and how we're going to look for trade ideas. Okay, so we'll go through it slowly. Don't worry, you don't need to fully wrap your head around this at this stage, but you keep coming back to this. This will be the general core framework of what we're trying to do. So again, before we dive into this, what I want you to now think about, which will really help to get your head around this, is think about 3 time frames. So when I think about my trade plan philosophy, my strategy, what I'm doing, really it comes down to 3 time frames. It's having a higher time frame, a medium time frame, and a lower time frame, okay? So essentially, the higher time frame is the objective, is what you're looking at. So if you think about this big thick black line here, right? Now, I'm just going to keep saying the higher time frame because it can be any time frame you want to use. But when we have a big bullish higher time frame trend, think about it that way. When I say about you want to know kind of what the objective is and when you want to know what the narrative is, it simply just means, are we currently in the pro trend run phase? Are we currently in that pro trend leg? Or are we currently in that higher time frame pullback phase, the counter trend pullback phase? Because all the higher time frame is in this example is an up movement, the down movement, right? The pro trend run, the one counter trend pullback phase, or again, the next pro trend run. Okay. So that's the counter trend pullback phase, and that's the pro trend run phase. Okay. And you just want to know, are you either in the pro trend run phase or are you in the counter trend pullback phase? That's it, okay? You don't need to overcomplicate your chosen higher time frame any more than that, okay? So when you then look at your medium time frame or your mid time frame, whatever you want to call it, unfortunately this acronym overlaps with multi-time frame analysis, but in this case, what I'm saying is your medium time frame. This is kind of what we call or we use for your immediate bias, and these are the POIs that you're going to be looking to trade from, okay? So your medium time frame is kind of like your ideas time frame. This is the one you're kind of following, that session, that day. Those supply and demand zones on your medium time frame, they're the ones that you're looking to trade, right, from those areas. Your lower time frame is what you then use as your timing mechanism, but for your medium time frame. Okay? So you have your overall higher time frame. You just want to know, are you currently in the pro trend run phase, or are you in the higher time frame counter trend pullback phase? Right? And the reason why that's important is because it tells you what to expect with your medium time frame. It can signal when you expect your medium time frame to change trend. So i.e., when we're here on the higher time frame and we're in that pro trend run, we know we've had that higher time frame boss. And what do we expect after a higher time frame boss? We expect a higher time frame swing pullback. So we know if we're sitting on our medium time frame, right, and we're following the bullish structure on our medium time frame, right, and it's bullish and we can look to buy these, we have to expect that any time when our higher time frame reaches a higher time frame supply, that our mid time frame is probably going to change trend to do what? To facilitate the higher time frame pullback, right? So that's why the higher time frame will signal when our medium time frame may change trend. Okay, so again, what we're going to be doing with our medium time frame is we're going to be following that for our immediate bias and with our POIs. Okay, and the way you want to think about the medium time frame is it's the soldier for the higher time frame, right? The medium time frame's job is to fulfill the higher time frame objective. Okay, so at this point, when we're having the higher time frame pullback, if you're shorting and you're following the medium time frame because it's bearish, right? you have to understand that its objective at that point, it's switched bearish to do what? To facilitate the larger pullback. Likewise, when the medium time frame shifts bullish here, why? Because its objective is to now fulfill the pro trend run, right, of the higher time frame to target that week high. Okay. And then again, that whole time, all of these medium time frame POIs and prices coming into them, we can look to trade them, but with our lower time frame execution. Okay. So again, that might be a little bit confusing to get your head around. I totally get it, but this will become a lot clearer as you go over this and go over this and go over this. Okay. It can seem very, very complicated, but I promise you this will become second nature. We don't even need to really think about it. So what I've put over here, right, is kind of two ways you can think about this. Is one as more of a swing trader and as one as more of a day trader. Now, these aren't technically, definitely, if you're just a swing trader, you would do this, or if you're just a day trader, you do this, because you could use this plan and you could still enter and exit in the same day, intraday. So technically you are a day trader. Likewise, you could use this plan and entering on the M1, and you could hold your position for days or even weeks. If you get into the right area down here on the M1, you could still hold this for a long time, okay? So it's not kind of the true definition of day trading and swing trading. It's just an easier way of us classifying kind of what time frame you're entering on. And if you're entering on the M15, it's a bit more of a hands-off, slower approach. And typically, if you're entering on the M1, it's a bit of a quicker approach, okay? So let's say you're a swing trader, and this is what we recommend you start off with, is you start off with M15 entries, okay? So you'll be using M15 entries, that's your lower time frame, but you'll be trading 4-hour ideas, okay? So your medium time frame will be the 4-hour chart, and then your daily is your higher time frame. And then if you're, let's say, more of the day trader, you just drop them all down a time frame. So your higher time frame will be the 4-hour chart. So you want to know if you're trading those 4-hour pro trend runs or the 4-hour pullbacks. Your medium time frames, the time frame you'll be trading the POIs, your ideas will be the M15, and then you'll be using, let's say, the M5 or the M1 for your execution. Now, these aren't, hard, strict rules. For some of you, maybe trading M15 entries, you may find the 1 hour can be really handy, but this is kind of just that general 3 time frame philosophy of what you want to be following, okay? So let's kind of go through this piece by piece. So again, let's say, let's do it like as if you're more of a day trader, right? So your high time frame would be your 4-hour, right? We have a 4-hour break of structure, okay? Now, the moment we have that 4-hour break of structure, in the back of our minds, we can be thinking, okay, we might get that 4-hour swing pullback at some point, right? But it's not just going to happen straight away. So if we jump down to our medium time frame, which is going to be the M15, okay? That whole time, you might see bullish structure on M15. It might just be internal, it might be swing, depending on how big price action is, but you're going to see that bullish order flow on the M15, okay? Now, what you can be doing this whole time is, I haven't drawn this very well, but as price is pulling back in, we could look for longs, right? There'll be M15 POIs here that we can look for longs, but we know at any point that larger swing pullback can happen on the 4-hour chart, so we have to be quick with our targets. But every time price comes into one of these POIs on the M15, what are we doing? We jump down and we quickly look on the M1 for an entry, okay? So that's what you can be doing. But like I said here, when the higher time frame is bullish, right, you can consider taking those long continuations from your medium time frame POIs, so your M15 POIs, following the M15 internal structure, okay? So this be on the M15, following that M15 internal structure, but being aware that at any moment, that M15 internal structure or swing structure could switch bearish, and we could have that deeper 4-hour pullback, okay? So you want to have quick targets. Now, thinking back to your higher time frame, the 4-hour chart, once that reaches, say, another 4-hour zone, that higher time frame zone, that increases the probability, right, that we're going to get that higher time frame pullback. Now, this whole time, the simplest way I can say to you is you should only be trading once your medium time frame POI has been mitigated, then you look at your lower time frame. Okay, so if I can keep it even more simple for you, just be thinking mainly about your medium time frame, and until that medium time frame POI is hit, you cannot look for a trade entry. Only once your medium time frame POI has been mitigated, i.e. the M15, then you can look for the lower time frame entry. So if price comes into your higher time frame POI and it hits your refined medium time frame POI within that, right? At this moment, technically now you could look for a lower time frame entry, right? Because it's within your M15 POI. So you could drop down to the M1. But you have to ask yourself is, you're trading heavily counter trend now. Everything's super bullish. So this is where it might be a bit too more advanced, right? And you might want to wait for what? Wait for your medium time frame to shift bearish. Because now what you're doing, now if you wait for the price to pull back in, now you're trading in line with your medium time frame, okay? So I appreciate this is a lot of things to think about. As you go through the course and later into the trade plan module, this will make a lot more sense. And what we recommend is you pretty much focus on at least always trading in line with your internal trend on the medium time frame, okay? Because at this moment, right, like I was saying, you've technically hit your medium time frame POI, right? So this is where you're then allowed potentially to drop down to your lower time frame, i.e. the M1, and look for an entry, sorry. But you're trading, everything's bullish at this moment, maybe apart from like the M1. So do you really want to take that trade? And that's where we recommend, right, waiting for your medium time frame to shift, okay? So that's when you may see, right, your medium time frame fail. This might be like an M15 boss or an IBOS, depending on how structure is. Then you wait for price to come back into that supply. And then again, you've come into your medium time frame POI. You're trading from that strong medium time frame high. So what can you do? You can jump in and look for your entry on the M1, let's say, right? Or what you may want to do is wait for an M15 shock. That gives you a fresh M15 POI again. And then in here, you can drop down to the M1 and look for your entry, right? Now price is coming down. You do not want to be buying from this week low, right? That was the strong internal high. That was the weak internal low. You waited for price to pull back into your M15 POI, and then you looked for your entries on the M1, right? Now you want to target the weak M15 low. And that's what we do. So then when price breaks that low, what do we have? We now have a new M15 internal range. So that's the new range you'll be marking on. So between those two orange lines, that's kind of when you're coming into the session, that's your immediate bias. You're like, right, the M15 is bearish, so I want to look for shorts from my M15 zones. That's what you're looking for. So you look for your M15 supply zones, okay, and you're going to look for entries. But you know that the higher time frame, the 4 hour, is bullish, and you know that the only reason why the M15 is bearish is to facilitate the 4 hour pullback. So you know you're going to be quick with your targets, right? You're not going to hold on for your shorts all the way down here. You're just looking for quick moves down to the week low or like down into discount demand, okay? So, if I can simplify it, again, because I appreciate this diagram can be a lot to take in, is each time you come to your chart and your session, you want to know whatever your medium time frame is, okay, if it's the 4 hour or the M15, and you want to mark out the current medium time frame range you're within, okay? So when we're between this strong high here and this strong low, your medium time frame is bearish. So your immediate bias should be shorts, okay? So what you want to do is you want to outline where are your medium time frame supply zones within that current medium time frame range, right? So again, I'm going to talk about it if it's the M15. You want to look for where are your M15 POIs, right? You want to look for shorts, wait for price to come into it, then it comes into it, and then straight away you may want to look for your M1 or M5 entry model, or maybe you want to wait for an M15 shock just to give a bit more confirmation that this is holding, right? Because it is counter to the higher time frame trend. Again, price comes into the fresh M15 zone that caused that shock. As soon as price comes in, what do? Jump down to your lower time frame and look for your entry model to then target the low, right? Then we get that M15 break of structure, right? It might be an IBOS, it might be a boss, depending on how things are set up. And now you're in this bearish range now, right? This becomes your strong high that broke the low. So this is your immediate bias. You want to focus on shorts from M15 zones, right? Your medium time frame. So you've got a zone here, you've got a zone here. We never know which one price will pull back to. So when price comes in, what do? Drop down to your lower time frame entry model. Look for it. Target the week low. Okay, take your profits, reset. Now what do we have? Well, this becomes our new strong M15 high that took out that low. This becomes our new M15 low. So this is the range we're within. Okay, not that one. So now what could you do? Well, your immediate bias is bearish for the M15. So wait for price to come into your M15 supply zones and drop down here. Well, maybe you want to do that, maybe you don't, because where are we within the higher time frame? Now we are in the discount, right? This is the EQ of the 4 hour leg. We've now pulled down into the discount, of the 4 hour chart. So what do we know from the higher time frame? We know at any moment that 4 hour high low could kick in. So shorting from here now is a lot lower probability, right? Because that 4 hour high low could form. So maybe you want to take shorts up here, maybe here. But now once we've pulled below the 4 hour discount, or maybe there's some 4 hour demands here, this is where you may want to hold off on shorts and just be patient. And now you want to start thinking about longs. So as we pull down into the 4 hour strong swing low, the hard time frame swing low, at this point, if you look left, you may find an M15 zone, your medium time frame zone, within the higher time frame. So remember, as soon as you get a medium time frame POI, that's when you're technically allowed to look for your lower time frame execution. Okay, it doesn't mean you have to. It's just that's the bare minimum. Right? So if you're, let's say, following the day plan, you cannot look on your execution time frame until you have hit that M15 POI. So here you may hit it. Now, do you want to jump on the lower time frame straight away? Maybe not. Maybe you do. Okay, this is going to depend, right, on your own aggressiveness, how things look. It will come with time what you want to do. Okay. If you want to be a bit more conservative, what you can wait for is an M15 shock, right? So at least you see some structure shifting in your favor. And what will that do? That will give you a new M15 POI. Okay, now we have a bit more confirmation. Let price pull back into it. And again, what can you do? As soon as price jumps into your M15 POI, then you look for the M1 entries, right? You're not looking for M1 entries here necessarily. You want to wait for it to come in and mitigate, okay? Now as price comes up into here, now remember at this point, your M15 is still bearish, okay? Because that was the last break of structure. This is just a chog. So there is every possibility that price could mitigate here and it could continue down and perhaps the higher time frame may switch bearish. But it's low probability at that point, right? Because we expect the higher time frame to take control. So now at this point, you may not want to short here. You may just want to leave it alone. Maybe you want to get in for a quick move. Again, this is going to depend on how aggressive you are. You see, trading is ultimate freedom of expression. You can do whatever you want here. Some people will take this. They'll take for an aggressive quick move. Some people realize it's not worth it and they'll leave it alone. Okay. So let's say we're patient. We leave it and we see what happens. Price then confirms that the M15 has now shifted bullish. Okay. So this becomes now our new strong M15 low and we can draw that across. And then this becomes our M15 high. So now what is our immediate bias? Remember, you always want to ask yourself when you're at the chart, when you're looking at your medium time frame, whether it's the M15 or the 4 hour, what's your immediate bias? Well, now it's bullish, okay? So when it's bullish, what do you want to be concentrating on? You want to be concentrating on buying. Where do you want to buy from? Well, I can only buy from my medium time frame POIs. So there's a medium time frame POI, and there'd probably be one down here. I haven't drawn it on. So now you have a couple of demands on your medium time frame to look for, right? M15 demand. And I simply just wait for price to come into it. My alert goes off. Now what do? Now I jump down to my lower time frame execution and I look for my entry model, okay? So do you see how it's the same framework every time? Again, I appreciate there's a lot going on and there's so many different ways in which this could look like in the market. But the whole time what you're doing is you're going, knowing what your medium time frame is, the M15, finding what range you are currently in for that time frame. Okay, we're bullish. I want to concentrate on longs. So I want to look for M15 demands and maybe there'd be one here as well. Okay, set my alerts, wait for price to come in. Then I look for my lower time frame execution. That's the framework. Now, again, doesn't mean you just trade every single M15 POI, right? You're going to have to learn how to do POI selection, look for ones that are maybe stacked with 4 hour zones, look for ones that are in the discount of this range here, right? And we're also going to obviously, you're going to learn liquidity concepts, which is going to be another filter, right? Things like that. Likewise, when this is bullish, right, you could technically look for the shorts from old supply. But remember at this point, if you're shorting, what are you doing? You're trading against the M15 now and against the 4 hour chart. So there's no guarantee that this POI is hold. Sometimes price could come in and then just literally blast through, okay? But again, if you want to be a bit more hands-on, a bit more aggressive, you could jump on the M1 as soon as price gets in here and look for the entry model, right, to play a quick pullback play. Then look for the long in here and now you can target a lot higher, right? It depends on how active you want to be. But the high probability ones are always going to be when you're trading in line with your medium time frame as a minimum, and even better when it's also in line with the 4 hour chart. So like this one is really good because the M15 is bullish, right? That's our bullish range. That was the last break of structure. But what is it also? It's also in line with the 4 hour chart, okay? Because remember, what do we expect with structure? That internal structure shifts bearish to facilitate the 4 hour swing pullback. Then when it shifts bullish, what do we expect? We expect these strong lows to hold, right, to be respected until we take out the high. And rinse and repeat, we get another M15 boss, right? There's some old unmitigated supply to the left, so you could technically look to play that counter trend short right on here if you wanted. Maybe you want to be patient, wait for price to pull back into, you'd have your strong low down here. You've got a decisional here. You're not sure which one price is going to come into, so maybe you want to jump into the M1 as soon as price comes in. Maybe you're not sure about this POI because you think it's going to come to the lower one, right? So maybe you want to wait for a bit more confirmation. So M15 then reacts, forms a flip. Okay, now you've got another one that's confirmed this level down here. Price comes into your M15 POI and you can jump down, okay? So you can imagine how many different variations there could be, right? I can't draw a diagram that's going to cover for every single scenario. And that's not the point. The point is to understand the framework. You have your higher time frame, okay? Objective, right? So that way it just really helps you to understand how your medium time frame is most likely going to behave. That's what the high time frame really helps with. Like I was saying back here, right? You could keep following your medium time frame. Like you could keep looking at buying these M15 POIs. But if you know that as soon as you come into here, right, this could be a strong low on the M15 and you could be thinking this is high probability to buy. But if we've just mitigated a higher time frame supply and we're overextending the higher time frame and we're expecting that pullback, that's why it really helps to have that higher time frame. Then once your medium time frame shifts bearish, okay, now you know you're playing the higher time frame pullback phase. So now you want to focus on trading shorts from supply. And perhaps this is where you're really happy to trade against the 4 hour chart, against your higher time frame, because it's the start of the higher time frame pullback, right? But once we get down into the higher time frame discount, these trades here, yes, at that moment it's in line with the bearish M15 trend, but this is a very different trade to this trade up here, because they're both in line with bearish trend, bearish M15, right, from M15 POIs, But this is at the start of the 4-hour pullback in the 4-hour premium where you're selling. Now you're in the 4-hour discount, you've come into the previous 4-hour demand range, and there's every possibility that could happen. Okay, so it's all about understanding that you want to trade in line with your medium time frame, ideally always pro your medium time frame trend, or at least order flow from your medium time frame POIs. But when you have a good understanding of the higher time frame as well as of where you are in the higher time frame, that can really help you to know when to just leave trades alone. Sometimes it's not worth it. Okay. And yeah, so again, if I could base down, simplify, like my strategy is I trade M15 ideas, M15 zones with M1 timing, with M1 execution. But knowing when and when not to trade an M15 zone, a big part of that is understanding your higher time frame and where you are within it. And all of the other concepts we use, premium discount, liquidity concepts are a big part of that, what we're going to learn as well. Okay, so watch this video again and again and again. We'll keep going over it. We'll go over this again in the trade plan module when we introduce liquidity concepts. For the majority of you, we are always going to recommend, even if you're advanced, that you start with this style, okay? Because if you get good at this, then you'll have a much higher chance of being good at this, because having success at trading on the M1 and lower time frames, it's hard. There's no beating around the bush. It is hard. But the only way I see people have success with this is when they understand how to pick the right timeframes in the medium time frame, POI selection, and that's first going to come from this. There is quite a lot of truth to the saying that the lower the time frame you go, the much harder it is. There's a lot more noise, and you have to have a lot more attention to detail and really have a good understanding of the higher time frames. So start off with getting good at this stuff, the swing style, and then if you want to, introduce the day trading style. Okay, but yeah. Let's have some fun with the liquidity concepts. Okay, it's going to get quite technical at times, especially when we get into the liquidity entry models. But I think if you can start to wrap your head around this idea a bit more first, it will really help you to kind of hold on to what it is, what we're actually trying to do here. Now, one last thing I'll say just before I forget as well is there won't come to a point where you always have to just, only take that initial entry from, let's say, the M15 POI on the M1, right? That's always going to be the highest probability. Again, from an M15 POI, super high probability in general, right? Now, this part of the leg here, right, on the M1, if you imagine on the M1, right, there's going to be loads of like pullbacks here on the M1. Now, can you take these? Yes. Okay. So it's not that you can only trade from within here, but that's what we recommend. These should be your textbook, what I call bread and butter setups. That's the ones you should focus on. And at times, when risk reward is on your side, when order flow and everything's aligned, and there's clean setups in the M1, yes. Or if you're doing swing, you can keep following the M15, and there will be more entries, right? But these are the ones where the circles are. Generally, that's where you want to be focusing on.